Most traders know it's really important to follow the smart money in financial markets. I'm talking about big banks and institutions. Traders also know that it's pretty important to follow what the economics of the world are pointing towards and what kind of trends in the fundamentals we could potentially take advantage of. The problem and the solution that we'll be discussing in this video is that most traders do not have any sort of tools to actually make this accessible to them. But do you know who does? Hedge funds. Big banks, institutional traders have powerful tools and resources, and my company, A1 Trading, specializes in building these kinds of tools for the average retail trader. In this video, I'll be going over how thousands of traders all over the world on the retail and some institutional levels are using our tools to better their trading, find more insights, and become a more successful trader overall. So in this video, I'll be going over the major features of the EdgeFinder and most importantly, how you can use them to add more insights to your trading. So an easy high-level place to start with the EdgeFinder is the top setups algorithm or top setups page. Now the basic idea of the top setups algorithm is it looks through a whole collection of data that is automatically being imported. This is everything from the commitment of traders data, which we'll discuss in a moment, talking about institutional money flows, retail money flows. It's looking at seasonality or observable trends that occur in markets. It's looking at market momentum and trends in certain assets. It's looking at economic data like GDP and CPI numbers and NFP numbers. And overall, it's taking all of this data in, it's thinking through all of it, and it's punching out a score and a bias for all of our favorite charts. So what you'll notice looking on this page is that whether you trade gold or silver or currency pairs or NASDAQ futures, whatever you trade, what you'll notice is that there is probably something on this list for you. Many of our traders are trading different things. We have Forex traders, we have options traders, a little bit of everything. So the EdgeFinder has been built as we get started into this overview for many different types of traders. Some of the common questions that we get on the EdgeFinder is this for Forex traders? Is this for futures traders? And the answer is yes to both of those and a whole lot more different types of traders. The other thing we often get questions about is this more for day traders or swing traders or position traders or investors? And the answer is yes, it's for all of them, because the idea here is the EdgeFinder helps us to scan a collection of data, which then you can use in your own time frame, charts that you like to trade, strategies, etc. I'll get more into that in just a moment. Again, back to the top setups page. What we're looking for here is synergy between the sentiment section, technical section, and economic data section. You'll see that each one of these categories is generating pluses or minuses towards the overall score that we see populated on the left-hand side. We can always flip this around at any time by clicking the score button to see some of the most bearish current assets. You'll see that there are plenty of neutrals. And then of course, if we flip it back, you'll see some of the bullish readings. Now the threshold, at least at the time of recording this, for our algorithm to consider something quote unquote bullish or very bullish or bearish or very bearish is 5 or greater. So what you'll see here is that if the threshold reaches 5 or greater, that is considered bullish. If something gets -5 or lower, it gets a bias of bearish. We've listed these down at the bottom of the page if you're an existing EdgeFinder user to keep up with this scoring. Now jumping ahead a little bit, let's talk about how we actually use the top setups page to find trading opportunities. And for this, I'm going to use a current trade and example that I am currently in. It's a silver trade. So what you'll notice is that silver is getting a bullish reading on the EdgeFinder, and we also recently saw price action pull back to a key area of support on the daily chart. For me, this is an entry on a technical basis that I really like. So I actually went long with a stop loss below this swing low. Now, this is a pretty standard technical entry, right? A break, a retest. It was also a 50% retracement from this Fibonacci retracement zone. Pretty easy, straightforward textbook technical analysis. But the reason I liked this trade and had more confidence on it is because the EdgeFinder's bullish reading on silver gave me extra confluence check marks saying that there's a lot of reasons that we could see silver continue higher. Now I want to stop right here and just make a quick warning. There is never a guarantee that anything is going to go up or down in the markets. There's always the opportunity that something changes, but what the EdgeFinder attempts to do is it takes a collection of data points, looks for high conviction, high confluence opportunities in the market. And then what I do from there is I take that idea and I say, okay, well, let me see if I can find a technical entry. We had a silver bullish reading over here. I waited for the technical retracement, found that support level, went long, and now I've got a pretty good trade running because the EdgeFinder spotted this opportunity, and then I found the technical entry and put my stop on the trade and now managing it myself. At the end of the day, the way to use the EdgeFinder to the peak success from the many traders that we have using it, what we found, the most successful people using the EdgeFinder are using it in combination and in confluence with their existing technical strategies. Many traders have the ability to trade technical analysis and they get that, but they were missing the key core components here. The sentiment and economic data were two things that many traders heavily mentioned that they really lacked and couldn't track very effectively until they had the EdgeFinder. Now, before we continue with this video and jump into a whole list of new items to discuss, I wanted to just pause and make you aware that if you have any questions throughout this video, there will be links for resources in the description down below this video. And if you have any questions at all, you can contact us on our website, a1trading.com. There's a live chat feature there, or you can leave us a message in the contact tab. Now we're going to take a look at the commitment of traders data. This is a very popular feature within the EdgeFinder. And what I've done is I've hovered over institutional positioning and I've done a drop down menu here, and you can see I've selected COT data. Now, COT data is one of our most popular features on the EdgeFinder because it's some pretty powerful stuff. Through the commitment of traders data that we have here on the screen, we can track the institutional money flow on key currencies, commodities, indices, etc. What you'll see is there's two main tables. We have the net positioning and the latest COT buys and sells. Now, the commitment of traders data is a weekly published report that shows institutional positioning from hedge funds, small banks, all sorts of different institutional entities. Now, these are the big guys and girls that are moving the market, right? They have big, deep pockets, and they are moving a lot of money in and out of the markets. So tracking them and observing the trends that they're on could actually be some really interesting insights. Now, I should mention that the commitment of traders data is delayed by a little bit. We get Tuesday's data on every Friday. Again, every Friday, we get Tuesday's latest available data. And while this is maybe not super useful for a scalper scalping the 5-minute chart, it might be very useful to people who are trading the 4-hour, the 1-hour, the daily chart to start looking at the bigger picture, the overall money flow of institutional buys and sells. Now, the COT net positioning table here is going to show us overall the positioning on a long-term basis that institutional money seems parked in. Now, again, we can hover over this and you'll see that it populates a percentage. So if we go to gold right now, you can see that the long to short ratio here is 83.5% relative to the 16.5% on the short side. Now, what does that mean? Well, this is tracking the futures contracts traded on gold. And so you can see there is a massive majority of long exposure rather than short exposure. So clearly on a long-term basis, institutional money is very bullish on gold. Now, why do I say long-term? Well, this data point here, this chart here, changes very little week to week. It's very minimal changes. Like most of the time, if something were to switch from one side to the other, it takes several months. I'll show you an example of that right now. Under the COT data history tab, we can view the historical records of the commitment of traders data. Our team has taken great due diligence to make this page because, again, it's a very popular page and a very important one as well. This shows us over time the long positions relative to short positions, and this yellow line is the net long percentage positioning by institutional money. Now, in the top right, we can select whatever we'd like. We have all sorts of different options. I've selected the Japanese yen to drill in this point about how net positioning changes very gradually over time. Going back in time to about last year this time, what you can see here in May of 2024 was yen bearishness was very high. Japanese yen futures contracts were very shorted by institutional money. But what you can see here is that over time, they very gradually got out of those short positions and then actually have flipped more to the bullish side. Now, the reason I say that is that from a day trading perspective, that change may not be super useful. But from a day traders' perspective, what about this ginormous drop-off in commitment of traders' short bias in a singular week? Now that we do have data for, and that is useful for short-term swing traders and day traders. Let me show you that table. Now this is the data that intraday traders and swing traders may be more interested in. It is the latest commitment of traders, buys and sells. Now this is updated weekly, and so this shows you on a week-to-week basis a heat map of the biggest money moves from the institutional players. So at the top of the list, you can see things that institutional money made the biggest net accumulation of. And I want you to pay attention to these two columns quickly, because what we can see here is this is the change in long contracts week to week and the change of short contracts week to week. Let's take a look at the euro for a second in isolation. I can click the Euro tab and this will highlight the selected area. And what we can see here is that the overall net positioning is pretty bullish, but really what's interesting here is that on a week-to-week basis, they added long contracts, but notice a dramatic decrease in shorts or short covering that happened on the Euro. This right here is a net strong accumulation or a bullish lean on the Euro. And so this has shown up on the top of our list, giving our traders who are using the EdgeFinder the heads up that Euro accumulation was very strong this past week. We can go to the bottom of this list and highlight, for example, the US dollar, where in this case, you can see they actually dramatically reduced long exposure or long contracts, and they increased their short contracts. That would be a very bearish week for the US dollar. Again, this table, the latest COT buys and sells, is the table that I think many traders are missing who are trying to track the COT data, because most traders are trying to study this, where you really want to be paying attention to the sharp money moves week to week if you're more of a trader. If you're more of a position trader or long-term in nature, I would actually say this is probably more valuable data to you. But the COT data history tab is more useful for spotting those big jumps on a visual basis or spotting long-term trends that institutional money seems to be flowing in or out of. The commitment of traders data is one of our most popular features for a very good reason. It allows us to better track institutional money flows on a consistent basis week to week and month to month. Continuing on with sentiment, this time we're going the opposite direction. Instead of tracking institutions, we're going to track general market crowd sentiment. Why would you want to do this? Well, oftentimes in markets, my friend Marco and I on our live streams regularly talk about the grandma indicator. And this is basically the idea that when your grandma calls you up and says, hey, have you heard about this Bitcoin thing? It is oftentimes a warning sign that Bitcoin might be nearing the end of its run. Nothing against grandma or disrespect to people who are not super informed on the markets, but this is something that when the mainstream catches on, when everybody's bullish on something or bearish on something, it can be a bit of a red flag and potentially a contrarian signal, which is exactly how we've built this data to help our traders spot these kinds of extremes. The retail sentiment tab allows you to look at a huge list of different things and take a look at the overall positioning that retail traders are accumulating. So if they're super bullish on something or super bearish on something, we take that as a contrarian indicator. Take a look, for example, at US oil, SPX, and the gold market, and you can see that retail traders are super bearish on gold. And go figure, they've been bearish for a while, and yet gold continues to go higher and higher. We just talked about how institutional money was super bullish gold and still is bullish gold. Meanwhile, retail traders are shorting gold at the highs. There's a consistent trend here, and it's why the big money keeps making big money and retail tends to lose money. So by observing the retail phenomenon, what they are super bullish or bearish on as a collective, we can sometimes use that as a contrarian signal in combination with the rest of the EdgeFinder's findings. A heavily requested feature by our customers is the retail sentiment history, being able to pull up the historical records as well as the current records for retail positioning, because we can watch through this chart the difference, the change in trends over time that retail traders are positioned on when it comes to things like the euro. But of course, we have everything on this list for our traders who trade gold, the NASDAQ, currency pairs, whatever you trade, minor pairs, major pairs, whatever you trade, we've got a little bit of everything. Next up, we'll be taking a look at possibly my favorite sentiment indicator on this entire list. It's the put to call ratio. The put to call ratio is a measurement of the options market volume, weighing basically the puts versus calls that are being traded on the options market. Now, let me explain the basics of puts and calls if you're not familiar. Basically, people buy puts or bearish bets on the market if they think it's going lower, and people buy calls if they think it's going higher. Now, there's a lot more to it than that, but for the sake of this indicator and for people who are not necessarily options traders, that's all we really need to know. People buy calls when they're bullish, they buy puts when they're bearish. This too can be used as a contrarian extreme indicator. For example, when this chart gets very high, when the put to call ratio gets high, that is showing you that we've reached extreme fear and there's a huge demand for puts. People are buying puts aggressively, making bearish bets on the market. And when this chart goes very low, that's showing you extreme greed has been hit. People are buying calls at a rapid rate. I personally love this chart so much because when it starts to get very extreme, most of the time I am looking for some contrarian opportunities to get long on the selected market. And most of the time when things are getting extremely low, I'm looking to sell that particular market. Of course, as with everything else in the EdgeFinder, this by itself is not what I'm looking at in its entirety. I'm looking at this in combination with the rest of the things we're discussing in this video. Now, a powerful recent update that our team has done within the put to call ratio is we've added a huge list of things. For example, you can now select gold and you can see the options volume for gold. This is incredibly powerful stuff, and I don't see very many other teams putting together these types of tools. So we've gone ahead and made sure that our tool stands out amongst the rest to offer the best stuff in the markets for people who are trying to best understand market sentiment so that we can potentially find some really good opportunities. And just to recap, we have everything from silver, SPX, the FTSE, US oil, silver, Russell. We have a little bit of everything in this list. Next up, we'll be taking a look at the AAII Investor Sentiment Survey. This powerful survey asks respondents how they're feeling about the stock market in the next 6 months. Simple as that, and it's a really powerful tool. Simple just ultimately is best in my opinion when it comes to trading. And what we can see here is that when people are getting really bearish on the market, really scared, this red bar starts to dominate the screen. And when people are much more bullish, you can see the bullish percentage peaks up, but it actually gives them 3 options: bullish, neutral, or bearish. And this data point can be observed every week, and it gives us an idea of how market sentiment is currently behaving. My favorite way to use this tool is to look for extremes like we're seeing right now for some potential opportunities to go against the crowd sentiment. When everybody's bullish, I look to get bearish. When everybody's bearish, I get to look to get bullish if I can find the right opportunities, again, with the rest of the items on the list here within the EdgeFinder, giving us that idea in the top setups page. Next up, we'll take a look at the Bitcoin to gold ratio chart. This is a really cool risk on, risk off sentiment indicator. Let me show you what I mean. Now, what this chart is doing is it's taking Bitcoin and it's literally dividing the price of Bitcoin by the price of gold. And the way that ratio would work is that if gold is going up quite a bit, then that would mean that this ratio would likely see Bitcoin relative to gold weaken. So if gold is going up more than Bitcoin, basically this chart goes down. If Bitcoin is going up or holding up better than gold, what we would see is this chart go up. Now, think about what we're talking about here. We're talking about 2 very similar but different assets. They both are kind of alternatives to traditional stocks and bonds, but Bitcoin is more of a risk on indicator, meaning when people buy Bitcoin, things are usually pretty good. Inflation's low, the economy's okay. People buy Bitcoin when they're optimistic and have some extra chump change to throw into crypto. People buy gold for a very different reason. When it gets dramatically bought, a lot of times people are buying gold for safety, security, money, kind of keeping it safe. It's a safe haven, right? So when this chart's going down dramatically, that's telling us that the market sentiment is risk off. We've added a 20-day moving average to keep this simple to read, and you can see the general direction tells you whether or not we are in more of a risk on or risk off type environment. Next up, we'll be taking a look at one of my favorite indicators on this entire list, which is the seasonality tab. Now, specifically, I've highlighted the monthly seasonality for this demonstration, but we also have weekly seasonality and seasonality scanners available as well. But let's jump into monthly seasonality. What this is showing you is the month-to-month average historical performance for the selected asset. And yes, as always, we have a little bit of everything within the selectable list. I've just chosen the S&P 500 for demonstration. So what we can see here is that certain months of the year historically produce a higher or lower return for the S&P 500. This can be incredibly useful for traders because knowing when markets are likely to be bullish or bearish based on historical basis can be a pretty powerful indicator to mix into your analysis. So during the month of July and the month of November, we've observed in the last 10 years outsized returns for the S&P 500. So this may tell you to be slightly more leaning towards some bullish opportunities if you find them in your trading, rather than getting bearish, right? Whereas maybe in the month of September, or in these months where you see low kind of mixed neutral returns, maybe to get a little bit more cautious. Now that we've gone through a lot of the sentiment indicators, let's now take a look at some of the economic data. So this is the summary page. Now again, I showed you the top setups algorithm, which is really all you need from the EdgeFinder if you're looking at it at a glance. In fact, usually when it comes to me on vacation, I really only dive deep into the top setups page because it gives me most of what I need to know in a summarized form. So does the economic heat map if you're trying to do a little bit more of a deep dive on the state of certain economies in the world. So I've selected the US economic heat map, and you'll see we have a ton of economic data. But many traders know that fundamental trends are really important, but they may not know every little bitty information about what each one of these things mean. What does PMI stand for? It's Purchasing Managers Index, but you may not need to know every single bit about that. You may just need to know, generally speaking, is the US economy more upbeat or downbeat in recent times? And this is what this page accomplishes for our traders. Under the US Economic Heat Map tab, what we can see here is that we have GDP growth, PMIs, CPI numbers, wage growth, non-farm payroll, right? We have a little bit of everything. But most importantly, what this page does is it shows the relative basis of the forecasted values relative to the actual values that came out. Let me back up and just explain this. Forecasted values is basically values that are put out by analysts and the economic community for upcoming key market events. So for example, let's say they think the CPI report is likely to come in at 2.9% year-over-year inflation. The actual data is when that data gets released, what actually shows up for the data. Now, the reason this is so important is because the market trades based off of surprises. So we have this column to show you the surprise between the expected value and what actually shows up. Again, forecast relative to actual. Some other terminology you'll hear for forecast is consensus, but we just use forecast, right? Forecast, consensus, it's basically what people are expecting versus what actually comes out in the data. Now, this can get confusing really fast, so we've made it easy to read. When we take a look over here, if you're a currency trader or a gold trader, take a look at the US dollar impact and think about it logically. What we have is the bullish and bearish readings based on how the data fell relative to forecast. This is what it's all about in markets. Again, the market trades on expectations versus what actually happens. And knowing those trend shifts can be very powerful. So when we take a look at this and we see, well, CPI data came in lower than expected, is that good or bad for the dollar? Well, it's actually bad for the dollar. It is more of a signal that the Fed may cut interest rates, and that's more bearish for the US dollar. But it's a good thing for stocks because lower inflation means people will hurt less when they're going to the grocery store, have more money to spend on business activity, and the Fed may cut rates, which makes borrowing money more affordable. Overall, it's good for stocks. So with this singular point of data, it's bearish for the dollar and bullish for stocks. But we want to make sure that our traders have all the right tools to see this data visualized, because again, you don't have time to go through every single one of these, write it down by hand, put it in a spreadsheet and do it all manual. Our tool pulls all the data in. It shows you the surprise from the forecasted value to the actual data, and then it shows you the impact for stocks or for the dollar. Finally, the summarized table at the bottom here shows you the US dollar's overall impact from this list of items versus the stock market impact for the US stock market relative to this data list. And don't worry, we don't just have US data. We have the European Union, we have UK, Japan, Canada, Australia, New Zealand, and we recently even launched Chinese economic data. So if you are somebody trying to keep up with economic data, there is no better platform on the entire internet that I know of that does a better job than keeping it all in one place, keeping it simplified, and most importantly, showing you the impact for all of this data. Knowing that you're on the right side of economic trends can be incredibly powerful, and not knowing can put you behind the curve. I cannot emphasize how important it is to recognize when trends are filtering one way or the other when it comes to economic data. It can really be the difference of the dollar making a huge run to the upside or downside, gold taking off, stocks falling, whatever it is. Economic data is usually at the core, and understanding how markets are surprising to the upside or downbeat, surprise at the downside, we can get ahead of that, we can watch that. And ultimately, one of the key things that this page does is it's a heat map that the Federal Reserve uses as well. What I mean by that is they may not be using the EdgeFinder. Maybe they are, maybe they aren't, but they're using the same data points to make their decisions. And the Fed ultimately is the money printer. So if they're going to look at this data and make decisions off of it, we as traders absolutely should be doing that too. Now, all of this data in its entirety can be a lot to look at. Let's say we want to drill down further. Well, EdgeFinder's got you covered. In our navigation bar, you can see we have economic growth data, labor market data, inflation data, interest rate data, and housing data for the US. If we pop any of these open, you'll see every single one of our data points has a dedicated page showing some key vital information in depth. For example, take a look at GDP growth. We've selected the US, but of course you can select other places. Under the US GDP growth, what we can see here is the overall GDP growth for the United States, and you'll see that this is color coded. If it's blue, it means that it beat expectations. Again, going off of that surprise index that we discussed a moment ago on the heat maps, we want to be spotting when things are upbeat, missing, or just kind of hitting expectations. So when something comes in line with expectations, the yellow dot represents our forecast, right? Our forecasted value. When it comes in and it misses, it gets a red bar. When it gets a blue bar, that means it beat the expectations. And when it's white, it just means that it came in as expected. This is a powerful way to quickly and visually represent the latest GDP growth. But of course, we have this for everything. Here's the services PMI data showing you again, whether or not it is exceeding, hitting, or missing expectations. And we've also added revisions to this data to see any revised data points that come in each month. We of course also have this for manufacturing PMI, showing you how the manufacturing component of the economy is doing. We also have this for all different currencies. Retail sales shows you the overall state of the consumer. Are they out there spending more or less than people expect? Well, again, the red dot represents your forecast, then your blue bar represents the actual point that came out, and the yellow is your revision. So you can see trends here very easily using our data. Here's consumer confidence. And when we jump into the labor data, we have a whole collection here as well. Here's the non-farm payroll broken out into its components. We can see the actual forecast and revisions data for every single month. We also have the private payroll sector, ADP, unemployment rate over time. You can also select different economies, unemployment claims week to week, JOLTS job openings, wage growth in the United States. And then we get into inflation data. Here's the consumer price index year over year. And what we can see is you of course have the US overall inflation coming down, going sideways, etc. We also have core CPI month over month, the producer price index, and the Fed's preferred measurement of inflation, PCE, personal consumption expenditure. And we also have that color coding system from earlier as well for here. Many traders also like to look at the yield curve and look for inversions or not inversions. And what we can see here on this chart is we have the 10-year bond yield minus the 3-month note. This is something very commonly used by people trying to understand what the bond market is signaling, whether we're going into a recession, whether economy looks good, etc. We also have some housing information, like for example, house price index. We have housing inventory. So this is like your average home price, your housing inventory, and mortgage applications as well. Next up, we can take a look at the EdgeFinder's score history graph and table. We'll get to that in just a second, but the graph shows you when you select a particular asset, in this case, gold, the historical scores being produced by the EdgeFinder's top setups page. Now, this is really useful for people who are looking to backtest or to understand how fresh a reading from the EdgeFinder actually is. Was it bullish a week ago? Was it bullish as of yesterday, etc. We've also broke this into a score history table. This is a very popular way to look at this. You can actually see lots of different charts at the same time. So by reading this, you can see that the EdgeFinder got bullish or a 5 or greater score on February 6, 2025. It's been bullish pretty much the whole time since then, continuing to produce a strong reading. Of course, you can do this for everything. We have metals, indices, and commodities, and then we of course have major currency pairs and minor currency pairs. We also have some EdgeFinder scanner pages, which allows you to get a summarized view of most of the things that we're talking about in one singular screen. So you can see I've selected the stock indices page. You can also select gold and silver. You can select what you'd like here, and you can just get an idea of how the EdgeFinder is scoring everything in a different way. The EdgeFinder has been a game changer for thousands of traders, including myself. It is one of the coolest things that I've ever been a part of doing in my life for building better things for traders. I went to school for computer science, and this is kind of my dream to combine building and creating things with my passion for markets, economics, trading, etc. And building this tool for traders around the world has been incredibly exciting, and we continue to build it better based on the feedback and surveys that our great customers actually answer for us. This has been a really cool thing about how the EdgeFinder's come so far, is we regularly survey our customer basis to find out what can we do next? How can we make it better? How can we improve it and make it more useful to you as a trader? At the end of the day, we're really grateful for the opportunity to have this platform on YouTube, to have a community around these sorts of tools, and to help traders take their trading to the next level. If you do not have a copy of the EdgeFinder, all the information can be found on our website or in the description down below. Head over to a1trading.com for more information, or specifically, you can go to a1trading.com/edgefinder to read up on all of its features in more depth. Thank you very much for watching. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.